All sectors red, not a surprise. VIX back to 22.5. Let's get to Bob Pisani. Good morning, Bob.
Good morning, guys. Tech's down 1.5%, but it's already well off of its lows. The rest of the market's not doing that well either. I mean, there's a lot of stuff down about that same amount. Energy, you can see weak here. Materials doing a little bit better. Banks were lower, and they're off of their lows. Industrials down about 1%. People keep wanting to know what's going on with the market, and it's pretty simple, folks. The sentiment has changed, and let's face it, the market's not generally dominated by fundamentals. It's dominated by sentiment and momentum, and so sentiment and momentum has shifted. It's shifted from growth/tech to value, to industrials, to materials, to banks, to the reopening names. Speculative tech, the stuff we like to talk about, the Teladoc and the Zoom video and all the Cathie Wood stuff, has been hit very hard as rates have inched up a little bit, and there's been inflation fears. This has been a problem since February, so the higher rates and inflation kills those speculative names. None of the fundamental investors want to touch any of that stuff, so there's no one to sell to. They just go down. Mega cap's a little bit different. Fundamental investors still support them. The numbers are great. The PE multiples are not very high on them, and that's why they have held up. Mega cap tech has held up better than the rest of the market. You were talking about, Jim was talking about Tesla earlier. I just want to point out, Tesla was up 700% last year. Okay, so it's now 30% off of its 52-week high, but it's still not even at a low for the year yet. Fastly was up 300%. It's 70% off of its 52-week high. Peloton was up 400% last year, 50% off of its recent high. Zoom video up 400. You get the point. There's a lot of companies that were up more than 100% last year, and they're the ones that are getting hit the most because they're generally more on the speculative technology side. If you look at thematic techs, everybody loves investing in Cathie Wood's ARCs and the 3D printing and the cloud computing. Generally, thematic tech has taken a 20 to 30 to 35% haircut right across the board. Cathie Wood's a more speculative end things, but you can see everything is down in that technology area that everybody loved to talk about in 2020. Now, big cap tech has held up a lot better than any of this. And if you look at the big mega caps from where they were, the 52-week highs, this is pretty modest declines. And the reason is they have more fundamental support. They have more fundamental investors that are behind them, long-term people who like the story, who like the value associated with the PE multiples are not terribly high on most of these, and they're supporting. At the same time, can I point out, there is a huge rotation going on. Yesterday at the close, we were at 52-week highs in many sectors of the S&P 500, including industrials, financials, materials, energy, healthcare, a whole bunch of the consumer staples as well were at 52-week highs, Carl. So let's remember, yes, tech's getting hit. Yes, speculative tech's getting hit really hard, but the overall market is rotating, and the S&P is still very close to 52-week highs, in fact, historic highs.
Shepard Smith here. Thanks for watching CNBC on YouTube.